How U.S. policy affects the Iraqi dinar, crafted in a human, conversational tone. Hey everyone, welcome back to the channel Iraqi Dinar Update. Today we're diving into a topic that a lot of you have asked about, how U.S. policy really affects the Iraqi dinar, and what all the updates we've been seeing lately might actually mean. So, grab a coffee, get comfortable, and let's get into it. First, let's be real, the Iraqi dinar isn't just any currency. It's a currency that's gone through a war, sanctions, a regime change, and an ongoing effort at economic reform. It's tied up with oil, politics, regional instability, and yes, very directly, U.S. policy. That's why people around the world, not just in Iraq, are watching it closely. Now, when we say U.S. policy, that's a big umbrella. We're talking about U.S. Treasury regulations, Federal Reserve decisions, foreign policy, military presence, sanctions enforcement, and of course, the actions of the U.S. Embassy and financial institutions operating out of Washington. All of these things combine to create either pressure or support for the Iraqi economy, and by extension, the dinar. Let's start with monetary policy. When the Federal Reserve changes interest rates, it affects global currencies including the dinar. If the Fed hikes interest rates, the US dollar typically strengthens, and emerging market currencies like the dinar tend to weaken in comparison. Why? Because investors tend to move money towards safer, high-yield environments. That means less demand for dinar, especially when Iraq is trying to attract foreign capital. But it's not just about interest rates. U.S. Treasury rules around money laundering and currency manipulation also affect Iraq. In recent years, the U.S. has clamped down on currency auctions in Iraq. These auctions are a major way that Iraq stabilizes the dinar by selling dollars and buying dinars to keep the exchange rate under control. But with the U.S. watching closely for corruption and Iran-related money flows, a lot of transactions have been delayed or blocked. That creates volatility and shakes investor confidence in the Iraqi currency. And this is where it gets tricky. The Central Bank of Iraq wants to stabilize the exchange rate, which is technically fixed, but it's been struggling to maintain that peg. You might have seen in the news that the parallel market rate, or black market rate, has diverged from the official rate. That's partially because U.S. policy has slowed down the flow of dollars into Iraq, especially when certain banks are flagged for compliance risks. So when people in Iraq can't access dollars easily through official channels, they turn to the parallel market, and that drives the dinar down there. The U.S. insists that this is about cutting off illegal money flows and enforcing international financial standards. Iraq sees it as too much external pressure at a delicate time when the country is trying to rebuild and attract investment. Now let's talk about foreign policy. U.S. military presence in Iraq, and the broader geopolitical strategy in the region, play a major role in the dinar's value. When tensions flare up, say between the U.S. and Iran, there's usually immediate pressure on the Iraqi dinar. Investors get nervous. Iraq sits right in the middle, both geographically and politically, so any signs of instability or escalation scare away capital. Conversely, when the U.S. signals continued support for Iraq's sovereignty and stability, it has a calming effect. Recent visits from U.S. officials and commitments to help Iraq modernize its banking sector have been seen as positive signs. But every time there's talk of troop withdrawals or increased tension with Iranian-backed militias, uncertainty returns, and with it, pressure on the dinar. There's also the matter of oil. Iraq is one of the biggest oil producers in OPEC, and oil revenues are the backbone of its economy. U.S. policy toward global oil markets, whether it's sanctions on Iran, output agreements with Saudi Arabia, or releases from the U.S. Strategic Reserve, all indirectly affect Iraq's oil revenue. When oil prices are high, Iraq makes more money, has more foreign reserves, and can defend the dinar better. When oil prices fall, things get tight, and the currency suffers. And then we have sanctions. While Iraq isn't under broad U.S. sanctions like Iran, individual Iraqi banks and politicians sometimes are. When that happens, it sends a message to international investors: be careful. It adds a layer of risk to doing business in Iraq and slows down the financial reforms that the Iraqi government and central bank are trying to implement. A big part of this puzzle is also the push to de-dollarize the economy. Iraq has relied on the U.S. dollar for decades, both for internal stability and international trade. But with recent U.S. pressures, Iraq has been exploring alternatives, trading in yuan, euro, and other regional currencies. While this is meant to reduce dependency on the dollar, it also creates short-term uncertainty. The market doesn't like mixed signals, and right now, Iraq's monetary path is anything but clear. The most recent updates show that the Iraqi government is trying hard to stabilize things. They've implemented stricter banking regulations, tried to close the gap between the official and market exchange rates, and have even sent delegations to the U.S. to negotiate more flexibility in dollar flows. These are all positive steps, but they'll take time. And here's the thing. A revaluation or major shift in the dinar of the kind that some investors dream about isn't likely to happen without full structural reform, strong anti-corruption enforcement, and alignment with international banking norms. That's where U.S. policy still holds a lot of influence. Washington can either support Iraq's efforts with technical help and financial support, or make it harder by tightening restrictions. So, what should we take away from all this? Basically, U.S. policy acts like a spotlight and a leash at the same time. It shines a light on what Iraq needs to fix and gives support when progress is made, but it also reins in behavior that Washington sees as risky or non-compliant. The dinar is caught in the middle of this, and unless or until Iraq fully stabilizes politically and economically, the U.S. will continue to have an outsized influence. That's why flowing U.S. policy, not just Fed decisions but also diplomatic moves and Treasury actions, is key to understanding where the dinar might be headed. Alright, that's it for today's breakdown. If you found this helpful, make sure to like and subscribe, and drop your thoughts in the comments. What's your view on the dinar's future? Are we heading towards stability, or are we still in for a long ride? Thanks for watching, and I'll see you in the next video. Stay informed and stay curious.